The broadcast is now starting. All attendees are in listen-only mode.
Good evening, everybody. Can everyone see my screen and hear me? Perfect. Thank you. Let's go ahead and get started. Rather than starting with the S&P, I want to start today looking at the NASDAQ because I think that is displaying a cleaner, crisper picture of subwaves that is giving me some immediate concern for some potential attempts at downside in the market. Despite the fact that I'm very, very bullish a lot of names in stock waves, I do and am also bullish on the Russell in general. In a couple of sectors, there are some areas that certainly could see more rotation than others and experience some near-term weakness. There's a question before we get started. What does Avi mean when he says in today's market update introduced by what this means is that if the bulls want to retain the advantage that they've developed in rallying beyond the 1.0 extension, then they have to provide us with a wave 4 pullback sooner rather than later. Andrew, we can talk about that in a minute. I've kind of mentioned things like that a number of times, where in either in the main room on the market side or also in stock waves, where I'll say, a quirky nuance to Elliott wave is that for something to be more bullish than getting a consolidation in the shorter term actually can count better as a fourth wave or a wave 2 that allows it to get more extension after that. Whereas continuing more directly can sometimes mean that it might be stretching from a fifth wave into actually just a C wave, or just not be, being further along and closer to fulfilling all of the objective of a larger degree versus getting a consolidation to extend that. So, I mean, I think the second part of your question might be answered as we talk about the NASDAQ here. So let me jump into that, and then if you still have further questions, you can look for more clarification. The NASDAQ, similar to the S&P, counts best where the March 2020 low was a primary degree wave 4, and we're inside a primary degree wave 5. I think Garrett and I think that the NASDAQ, though, is further ahead in that count off of the low. The NASDAQ got too high to reliably consider this just the parentheses wave 1, and this is acting far more like an ending diagonal as a fifth wave inside the third, rather than the heart of the third wave inside our larger primary wave 5. So that relies on getting a 1-2, 1-2 start off of the low, a little bit differently than what we have in some of the other index charts. But this move since the September low, counting as a completed ending diagonal, I think works very, very well. The only difference between my count and Garrett's count is I think Garrett has this third extended up to here, and he's looking at this as 1, 2, 3, 4, and maybe getting one more nominal high into the low 16,000s as the fifth wave of the fifth of this parentheses wave 3. So when we zoom in here, we can add that as an alternate just for context. But to get to that higher high that Garrett has in that ending diagonal, this would be an ABC wave move for the A wave of that final fifth. And so we'd be looking for a consolidation as a B wave from here to hold in the 14,800s, and then get a C wave up towards that low 16,000 region, and then we could start the larger fourth wave. My concern, though, is that the fourth wave has already started, and that instead of this being an ABC move up for the green A wave of the circle lowercase Roman numeral 5 of this 5 of 3 getting an extension towards 16,000, we can be set up, instead of holding the 14,800s, that could be just wave one of a C wave down targeting the 14,000 or mid to high 13,000 region in the NASDAQ. Here's where, something similar to kind of what Avi was talking about. If this is going to be more bearish and stretch further towards the lower 13,000 region, I'd be more inclined to label this entire thing the capital A, B, and a C wave for all of wave 4 off of the September high. Whereas if we only get to the 14,000 region, or a little bit below that, that would look more like still just the A wave of a larger parentheses wave 4. The 236 is kind of the minimum fib target. The 236 retrace of the third is one of those minimum guideline fib levels that we look at for where a fourth wave should hold support. So you could have a fourth wave that it just wouldn't be as reliable. So my default way of counting that would be that it's only the A wave, and we'd only be looking for a B wave bounce and then a larger C wave down to complete a more reliable fourth wave. But that's a discussion for later on down the road. Right now, we're looking at the immediate risk potential of starting a C wave down that can target the 14,000, or getting a corrective consolidation as the B wave and setting up for one more high. The difference here, because both of those are going to target the same area, a wave 1 is going to target roughly the 14,800s, as well as a B wave. The wave 1 of C should be a 5-wave move down, whereas the green B wave should be an A, B, and a C. That's going to be the primary difference. If we see an A, B, C move down, that gives an edge to this green B wave, and most traders might want to scalp long for a possible C wave up towards 16,000. Even though that could be an ABC for wave 1 and an ending diagonal, we would still get a decent bounce as this white wave 2 from there, and could then, if that was only a clear ABC bounce up that could make a higher high, then you could certainly look down again from there. But I have certainly hedged my accounts, even though I'm still very long on individual names, and long on things like TNA, leveraged Russell play. But I am hedged for this potential that I see from this immediate risk area in the 15,400s as a B wave top. If this starts down, like I said, even if it doesn't get all the way down to the 14,850 region, if it starts down and then makes a new high over the high that we made earlier today, after a decent little retrace, then it's no longer as immediately bearish, and that would look more like a possible 5 waves up off of the low. That might count better if you actually count this as the low instead of this, and you can get this as a better 1, 2, 3, and then a fourth and a fifth. But this was not a large enough consolidation to count it as anything other than that alt circle of this fourth wave, if we count that a little bit differently, as we were talking, from here as 3, 4, and then 1, 2, 3, 4, 5 of that fifth. So that being said, let's jump over to, I mentioned the Russell a few times, so the complete polar opposite of the immediate risk that I see in the NASDAQ. The risk that I see in the Russell is much more of an alt. It would be an alternate of an even far more complex fourth wave that started back in the March high and easily counts complete into either the July, or I prefer the August low, even though that was not a actual lower low than July, for the fourth wave in the Russell. But I think the Russell is starting this minor degree fifth of intermediate degree wave 3 that is targeting the 2800 region. So immediate supports are now the 2100, 2180 level. And I think this can be working on a larger ABC up either ABC up for wave 1 or a leading diagonal up for a larger wave 1. But there is still this potential of a nested impulsive structure where a move over the 2300 region could be pretty explosive to the upside. And there are certainly a lot of stock waves charts that can support that. But the risk is that if this 2180s can't hold, then there is a risk that this can get a more accelerated drop as an alternate fourth wave down towards the 2000 or just below. That would be an incredibly complex minor degree wave 4, would be very disproportionately large compared to the wave 2 that we had, but still certainly valid. So that's kind of where we say each chart on its own, we can be very bullish on the Russell by itself, but we have to recognize the risk that the NASDAQ could be topping in that B wave and setting up for a C wave down that might be proportionate with this initial move down, which was certainly stronger in the NASDAQ than this move down in September was in the Russell. But that could at least put some initial pressure on the Russell charts or names that are smaller. Vibur asks if the parentheses 3 is part of a diagonal structure, doesn't the 4 have to enter into price area of wave 1? Garrett and I have observed that's under traditional Elliott wave. And I'll just draw that on a chart here. We'll make it an ending diagonal just for argument's sake. And that's, you might notice on a number of charts, sometimes I'll have a fourth wave like this that has a little red exclamation mark from it, because under traditional Elliott wave rules, in a diagonal structure, that's where all of the subwaves are ABC moves. Even 1, 3, and 5 are all ABC instead of being 5 waves up for those. And oftentimes you can have you're allowed to have overlap of the fourth into wave 1, but Garrett and I have observed many times where we get ideal extension of the subwaves, particularly if we hold a wider consolidation for the wave 2 instead of a deeper consolidation, that we get a normal retrace for wave 4 that does not actually overlap. And so a pattern might subdivide and count best as a diagonal, but the fourth wave does not actually come into the price territory of wave 1. So we don't hold that is a requirement, although some Elliotticians are not as thrilled with our version of diagonals that do not have to overlap. So now moving on to the S&P. The S&P, I think, leans a little bit more to the way that we're counting I'm going to go to my tab that's called Uber Accelerated Bullish Count, just because that's the one that I've been keeping most current. The difference between the S&P for the most part and the NASDAQ is that the S&P has a cleaner 5 waves up into the June high and can count a wave 2, even though it's a pretty shallow and small wave 2, can count a wave 2 later to the later June low. And then it's not, even though it counts a better wave 1 and wave 2 than the NASDAQ, it still counts a little bit further behind, with this being only the minor degree wave 3 inside the subwaves of the intermediate degree third. So that's the parentheses wave 3. So the pale blue fibs here, I'm trying to frame this so that we can see the most detail and all of the move. The pale blue fibs here are our ideal fibs for the parentheses wave 3. We know Fibonacci pinball is going to want our wave 1 to top somewhere between the 382, 0.50, or maybe the 0.618. This one got halfway in between the 0.30 and the 0.50, so that's perfect. We got a nice ABC retrace for wave 2, got a strong start to wave 1, but then a deep retrace for the 1, 2 inside the 3. And then again, the only difference here is you could move this 3 up to here and then count a little bit more extended 5th wave And so this could still be working on an extended top for the minor degree wave 3. But the 100% extension that we're still flirting around with here is the most normal fib extension for a minor degree wave 3 based on Fibonacci pinball inside a third. So if we can hold a nice fourth wave, then we have a very high probability target for our minor degree fifth of 3 into the 5100s, maybe up towards the 5300s, but as that 5 of parentheses wave 3. When we zoom in on the structure here, we can see a very, very clearly defined A, B, C up, where this is 3 waves in the A wave and then an impulsive C wave, which is very common inside of a B wave bounce, coming right up to the prior high, but not yet exceeding it. It is possible for B waves to make higher highs, nominally higher highs. It's called an expanded flat. Usually, though, if you are going to get an expanded flat, the expanded flat is going to be all of the consolidation at that degree. So what that would imply is that instead of getting another B wave and C wave down into a more normal, more reliable support region, closer to the 4100 region for the fourth wave, we might be completing all of the fourth wave at a much more shallow consolidation. I would still really want that to get down to at least the 4180 region to reliably be able to count that as all of wave 4. But that is the immediate downside risk that I see. I don't, if this is part of an extension of this wave 3, there's not really a reliable pattern for that, nor is there a reliable extension target. I don't see any clear pattern that takes this all the way up to the next blue fib at the 1236. And even if it was going to get up there, if this was already 1 degree further, a consolidation here as a flat would still be welcome. So that is additional immediate risk that I see from this region. The measured move targets back down at the same region because we're just about at the previous high. A measured move only would target right around that 4280, 4270s region. But again, if that stretches more, the more it stretches to the downside, the actually more reliable that could be to complete all of the wave 4 and not need an additional B and C wave potentially into the start of next year. We have frequently looked at the RSP chart. So wanted to pull up the RSP chart and see how that equal weight version differs from the S&P itself. The count up to here is all the same. The main difference at the moment between the S&P itself and the RSP is that the RSP did actually make a nominal higher high the last 2 days over the beginning of September that counted well as the top of all of our third. So again, the same discussion there. It is possible that this is some extension targeting the extension level for more of a 3 is a little bit more reasonably attainable in the RSP. So maybe this is 1, 2, 3, and you need a fourth and a fifth wave up towards the 162.50 to 163s as the extension of this third. And then you'd get an A, B, C down from there towards the 140s. Or this is all of an extension and it's some more awkward ending diagonal count, and you get an ABC down from there. Or as we talked about on the S&P, the higher high here makes it a little bit more probable that if this is still just a B wave, that it's the B wave of an expanded flat. And preferably we would stretch a little bit below the 146, 145 region, closer to the 143, 142, to reliably count that as all of the fourth. But any consolidation down as a C wave, because we do have a nominal new high, is more probable that it is all of the fourth wave in the same fourth of the parentheses wave 3. And based on the larger Fibonacci pinball that we have for this degree wave 3, We hit a perfect 100% extension for the third, as long as we hold a reasonable support above the 139 region, maybe down to 135 for a fourth wave. We have a very high probability target into probably the summer, next summer, of 187 region for the 138.2% extension of the fifth of wave 3 in RSP. Before I move on from the broad market index charts, are there any other questions there? Andrew, did I kind of get some of your question answered in terms of what Avi's looking at on the S&P, that if that holds, let me go back to that. And actually, it might be easier to see. And we'll hold here. That if this is some sort of extension of the third, he wants to see a fourth wave consolidation and then a fifth wave up. And that if this just continues a little bit higher, then it loses that opportunity to get a fourth and a fifth and still looks more like this potential B wave top. I consider the B wave a stronger risk here because of the subwave structure off of the low. This looks very much like an ABC up for an A wave, an ABC retrace for a B wave, and then 1, 2, 3, 4, 5 waves up for a C wave. That is textbook Elliott wave structure. I don't care about the larger context. Any chart where I see a textbook structure like that that's coming up to the a normal retrace zone of a 618, a 764, or in this case 100% retrace of the initial move down, I'm going to be looking for a measured move down targeting that same low region as a wider flat consolidation. That is a very high probability setup. And in this case, because my portfolio is so long with individual names, I see it as a very good opportunity to use some leverage products to provide a nice hedge for that potential. All right, let's move on to talking about everybody's favorite, the gold miners. All right, I'm going to start with the larger, wait, I think I have a better version of this. Nope. There we go. Let's look at GDX. So GDX has a very awkward, deeper consolidation here that is hard to get a very clean subwave pattern count for it to be complete. I think the best way that GDX counts as complete as a larger correction off of the August 2020 high, basically a year ago, is as a WXY for this B wave. I think that the GDX, GDXJ, as well as so many of the individual charts that Garrett and I look at in the mining stock service count very well as being inside larger diagonals, where this was still a primary degree wave 2 low in March 2020. But where these stretched to, a lot of things held around this 764 level, which is higher than what we normally see for Fibonacci pinball, and then have certainly retraced higher than wave 1 for Fibonacci pinball, and have retraced more than they should have to be a fourth wave. This A and B structure inside a larger third makes a lot of sense on a lot of those individual names. A measured move for the wave 3 puts it a little bit past the 1618 extension in the yellow fibs. So looking somewhere in this 70 to 75 region is a little bit more realistic to me, but I wouldn't be upset if it wanted to stretch to 81 or 85. But if we're looking for that, proportionate of a C wave, we want to see 5 waves up as wave 1 into the 40 to 43 region. It's going to be ideal. And we see some nice intersecting fans as well as that 100% yellow fib right in that region, kind of a nice crosshairs for sometime into the first half of next year to get 5 waves up as wave 1. And inside that, it looks like we are working on our first 5 waves up as just the wave 1 of this wave 1. And then if we hold a normal retrace for the wave 2 and get more normal extension, we can stretch this up right into that 40 to 42 region for wave 1 of 3. So right now we're looking at this trying to get a 5th wave up off the low. It still counts. It could still try and get more of a 4th first and then a 5th wave up. We're looking at the low 34s to be good resistance for that 5 waves up as wave 1. And then we're going to want to see an ABC retrace as wave 2, holding a higher low. And that would be excellent confirmation at a pretty significant bottom. Certainly any stronger drop or a stronger drop without getting a 5th wave up, or failure to hold, even a 764 retrace, is going to be an early warning sign that this low might break. And if that low breaks the October low, then it opens the door to at least the 27 region of support, possibly down to the 24 region of support, below that, depending on the structure. But right now we have a really good looking start to a potentially major bottom in the GDX and as well as GDXJ. We'll take a look at GDXJ. And again, very similar structure, that larger parentheses B wave. I was following the microstructure here, even more so the last few days or the last week before GDX looked as clean. Can still get more of a 4th, but looking like our 5th wave up. We're going to want to see an ABC retrace, holding ideally this 42 to 40 region as the wave 2. And then again, that is going to be fit nicely inside normal Fibonacci structure for wave 1 of the larger parentheses wave 3 starting. Now let's jump over to the metals, starting with gold. I'm going to zoom out here for a second. Oops. Nope, this isn't the chart that we want to zoom out on. We want to go to this tab. Nope, this tab. Nope, this tab. Some of these charts I keep a window open on the right tab all the time on one of my other monitors, but it is easier for me to pull things up in a single window for the go-to meeting, and then just try and find which tab I'm currently using for the current count. All right, so gold, we are counting this as being in a primary degree wave 5 that started back here in the March 2021 low. Got a very deep retrace for the intermediate degree wave 2, but this counts best as being inside an ending diagonal for this 5th wave, the circle wave 5. So the ending diagonal is a 5-wave move, but the subwaves, particularly wave 3, wave 1, 3, and 5, in addition to wave 2 and 4, which are always ABC moves, are ABC moves. So that's an ABC wave 1, an ABC wave 3, and an ABC wave 5 for a diagonal. And as we talked about at the beginning of the video, wave 4 in a diagonal is the only time the 4th wave is allowed to overlap with the wave 1. But as we discussed, that isn't a requirement. Just our motive wave program is going to yell at us with that little red exclamation mark if we don't have it overlap. We know that A waves can be either 5 waves up or 3 waves up. More commonly, though, I think A waves are 3 waves, are ABC moves themselves. So when we zoom in to the structure here for gold, we're looking at an A and a B structure off of the more recent August low and trying to start this C wave up as the A wave of 3 targeting the 1900 to 1920 region. And when we zoom in on the structure off that B wave low, we can see that we only have a 3-wave move up initially. So that means that the C wave of the A wave here is also likely a diagonal itself. So that's an ABC up for wave 1. We're looking for an A, B, C move up for this purple wave 3. and then an ABC up for the fifth wave. As Garrett and I have discussed many times in the mining stock service and in stock waves, it is not at all uncommon to see a C wave that's a subwave inside of a larger diagonal to also become a diagonal. That there's a lot of push and pull inside and chop inside that diagonal structure, the larger diagonal, and that can manifest itself at the smaller degrees as well. This is a little bit of a sharp drop that we've talked about in the mining stock service for the wave 2. So it is possible that this is just the A wave of a wider wave 2, and we're getting a B wave bounce, and then maybe we get a C wave down towards 1750. But we really want to see this hold the 1750 region, then give us a nice little inverse head and shoulders here, and can get more of our measured move up towards the 1880s to 1920s. QSI can be acting a little bit more bullish in the shorter term, off of a potential fourth wave that made a lower low than gold did in September. But off of that, it really was threatening initially to drop as that purple wave 2 with gold, but pushed further ahead, maintaining an impulsive pattern. So I think this is just the fourth wave inside the third, which might stretch up to the 25 region for the 200% now, because this got all the way to the 1618 and still looks like it's only the 3 of 3. So we can move all of those supports up a little bit higher, and then our fifth wave up just past the 200-day moving average, closer to the 2618 extension here. So I'm going to add another green support line in this region. So any fourth wave here, even if this is the parentheses 4 already, should really hold the 2350s and ideally closer to 2370, and then head up towards 25 for silver. We can also take a look at copper. If copper is all of a B wave, an alternate B wave, it has to count as a WXY up. If it's not a WXY for all of a B wave, then it can be getting more of a fourth and more of a fifth in the C wave of that B wave is A, B, and then 1, 2, 3, 4, 5 for C. Or if we fade more here, this fade could be 1, 2, 3, 4, 5 of the green wave 1. So from there, we'd be only looking for a corrective consolidation that holds the 4.5, 4.4 region, and then would be very bullish in an early start to the parentheses wave 5. But this low is not at all reliable for all of the fourth wave. It was not a clean ABC structure into that. Kind of looks more like a WXYXZ structure. Which we can see if it'll let us. Yeah, it won't let us do a WXYXZ for that. But not a clean ABC move, and also not at a deep enough retrace that makes it reliable. So that's why I'm maintaining the potential for a C wave down to target the high 3s as a wider flat. In this case, potentially an expanded flat if it holds the 4 4s and gets one more high up to 4.9. And if we only get a corrective consolidation from there, then this could be very, very bullish, heading well into the 6s for the parentheses wave 5. Platinum is another metal that we've been paying very close attention to in the mining stock service. I think it's inside a very, very large diagonal. We were looking for a move down from this high here in May, but wanted to see it hold support in the 1,000 to maybe 990 region as a B wave. We're counting this as A, B, and the C wave already in the third of a smaller diagonal, and its failure to hold support there pushed us into a larger degree, wave 1 and wave 2, where this can just be starting the A wave of the primary degree wave 3 that can easily be targeting the 2100s to 2300s, maybe even all the way up towards 2650 is also a valid fib extension for the primary wave 3 long term. But as we talked about on other diagonals and other counts, the A wave, the parentheses A, could be either 5 waves up or 3 waves up. And my default is always going to be to look for those to be an ABC move, and then inside that, another ABC move. And then when we zoom in a little bit further on platinum, we see further potential for this circle A to be an ABC move itself. I have that. That's not as, the further down you go in degree, the less clarity you get for those subwaves. So a lot of times some of those subwaves will be, I'll use a different color to emphasize potential structures that you might see. I use blue and purple a lot for diagonals, green obviously for an impulse, yellow is usually for a more aggressive or more immediate downside potential. But some of those color-coded subwaves, or sometimes they'll be faded if it's a smaller subdegree wave that isn't necessarily as clear. This could be 1, 2, 3, 4, 5 waves up for this A wave instead of an ABC move. Let's move on to energy, and we'll first take a look at oil, and then we can look at natural gas. Define, here's my operative tab. I'm counting the August low as an intermediate degree wave 4. And this structure is part of an intermediate degree wave 5 that is targeting the 90s to maybe over 100. With this move up, very clearly looking like the wave 1 and the wave 2 of an impulse. We have 1, 2, 3, 4, 5 waves up right into a 1618 extension to potentially be completing this minor degree wave 3. Could certainly extend more, but more extension to 8560 would be the next fib. More extension is not reliable. This already looks easily like this could have been all of the 5th wave to the minimal target of the 1382, and then this looks maybe like an ending diagonal extension to get to the next fib. So there's no reliable count here looking for more extension. It doesn't mean that it's an automatic drop down to the support region of 80 to 77 for a 4th wave, but that is certainly a risk that I see. And there are a number of individual energy names, including also just the ETFs XLE and XOP, that have potential for, at the very least, some smaller degree 4th wave consolidation in some of the moves that they've had off of their August and September lows. And some of those even allow for this 4th wave to give them a wave 2 consolidation, retracing more of this move that they got their equivalent moves up. A lot of those energy names are not as far ahead past the previous high from July. So a lot of those can still count as the equivalent of just the wave 1 inside their larger 5th wave, or some of those are C wave moves. Platinum, going back to platinum for just a second, there's a question about it. I think this is a very high probability bottom. It is not confirmed the start of the next move yet. It's a larger bounce, where if this is only, say, an A wave of a wider flat for a wave 2, it should get a much higher bounce towards, this target is the A wave. And I'll make that a yellow B. So if this isn't all of the wave 2, the way that it's bounced so far implies that we should at least get an ABC structure up to this region as a B wave, and then we could hold a wider flat further out down here as this larger circle wave 2. More confirmation of a bottom in platinum would come from a larger retrace holding a higher low. Until then, you can use this low if you're playing something like PPLT, then the relative longer term risk reward for this primary degree wave, or the primary degree wave 3 equivalent, and off of this low is still very, very good risk reward. But there should be other opportunities to get in, maybe not necessarily at lower levels than where we are right now, but with more confirmation of a bottom being in place. My ideal, though, would be a corrective consolidation now that holds a higher low in the 970s. Moving on to natural gas. Motive wave, or my data feed, wants to use the QG at QG ampersand, or not ampersand, at QG hashtag as the symbol for natural gas futures. I'm counting natural gas. I don't know if I rely on the June low here to be a primary degree B wave still, because it did make more than a 100% retrace. But I think natural gas is filling out very nicely as a larger diagonal that is proportionate with that off of that low. There was a chance for this to hold in the 5.15 to 5 region as a purple 4 inside this C wave and get one more high. But this looks more like it did in fact top in the third of our diagonal. So we're looking for an ABC move down as the fourth wave into a minimum region of the 440s. Ideally 3.9 to 3.5 is going to be even better for the fourth wave of diagonal. And that should be an ABC move. And I think that it is more probable that this is just the A wave, and that we're going to then get a decent sized corrective bounce as a B, maybe into the December, January peak winter usage months, and then into March or April get that C wave down. But this does look like as an ABC off the high, it should attempt one more low here as a fifth wave of that C of A, and then start a bigger bounce that would be an ABC bounce up for the B wave. All right, we can also take a quick look at the dollar, and then we can also take a look at some bonds. The dollar, not that we look for specific correlation, but I see the potential that a major top was struck back in March of 2020. I can count 5 waves down. I'm labeling that as an A wave, but it could actually be a wave 1 of something even more bearish. There was potential that this was all of a very, very shallow consolidation. That's why I labeled that red. But we did, in fact, get the more proportionate ABC wider consolidation to a 382 retrace. And can easily be set to turn down in a C wave down here. I'm going to slide all of these targets over. We'll zoom in just a little bit to a 6 hour. Well, no, I thought I could see that C wave on the 6 hour. So let's go back to the daily. And let's snap this in place over here. A 100% extension of our C wave would look good right there down at that 81 level, longer term. And the wave 1 of that should target right around 89 as 5 waves down. That would be the most ideal. And then a wave 2 bounce, and then 3, 4, 5 down towards 81, maybe stretching down towards 78. And then for expedience, I'm just going to take a look at the 30-year Treasury. Actually, I might look at the other Treasury charts as well. The 30-year, here we go. I have in a very, very large long-term diagonal, very, very near the end. So we have a clear ABC move up off of the extreme low in 30-year bond prices from September 1981. Go ahead and add that subwave and not be lazy. And then we have an A, B, and then a stretched out 1, 2, 3, 4, 5 waves up for the C wave of the cycle 3 in that diagonal. And then again, it seems like I'm being lazy here, but counting this as an expanded flat, as an expanded flat combination, where this is a WXY, for the cycle degree wave 4, although we could just count this as the cycle 4 and all of this is the A wave. But I think this counts really well as A, the primary degree B wave. They could still make one more low, and that's what we'll look at when we go back to the 4-hour chart, but could easily be starting the primary degree C wave up to complete this very, very large cycle degree 5th of the huge diagonal going all the way back to 1981. Now, looking at this on the 4-hour chart, we do have potential that this move up was only a 4th wave bounce in the orange C wave, still trying to make one more low in this B wave that might drop down to the 148, 146 region. If that's the case, this can bounce more in this orange B of 5 and then drop down as a final kind of capitulation drop. But there is certainly potential that we're holding an A-B structure as part of the ABC up for wave 1 in an ending diagonal for our C wave. That or maybe 1, 2 of a leading diagonal for this wave 1, but that would stretch it out further. The 10-year has already made a lower low for that orange 5th wave, but could be closer to completing all of the 5th of the orange C wave. And so instead of getting a blue C wave up of wave 1, it could just get 5 waves up for wave 1 off of the already lower low that it has for that B wave. So very similar counts there. Even if we don't get the lower low in the 30-year, if they diverge a little bit just in here with the 10-year making the lower low and the 30-year not, both of them should get 5 waves up from this region if it's going to hold as to complete wave 1. So I'd be looking for maybe a little bit more aggressive of a 5 waves up on the 10-year, whereas the 30-year would just be the blue C wave. There was a request for TLT. The problem I have with TLT is that it is kind of an amalgamation of those two charts. The mandate of TLT is to be a 20-plus year duration treasury exposure. So it does that using exposure to the 10-year and the 30-year and the 10-year in different mixes, and is not always static in the way that they do that. So at the larger degree, it counts very much the same. I guess I don't have that on the chart as a cleaner other tab, but looking for a similar primary degree B wave or C wave up longer term, it got a move higher and then held a consolidation higher, even relative to the 30-year, and certainly is not making a lower low right now compared to March like the 10-year is. I think it counts best in line with the 30-year if this region is going to hold as an A, B, and a C wave up in blue, although technically it's still valid as a 4th wave and a leading diagonal up for a green wave 1. But I think it is probably, you could trade the TLT, but I would probably trade it as a trading vehicle and follow the Elliott wave count closer on something like the 30-year bond itself. All right, anything, I guess sometimes we look at EEM. I'll pull that up, and then any other questions before we finish up, guys? All right, EEM I think is actually very similar to the miners charts in that it is a larger primary wave 3 off of the 2020 low and an A-B structure inside of that primary wave 3. The mining stocks already got this deeper B wave and look like they are trying to start the C wave up. I'm not as convinced because we did not get nearly as deep. We only got a 23.6% retrace for our B wave. So a default view on Elliott wave would be to consider that just the A wave and look for a larger consolidation as a B. That would be the norm, but we can be more bullish because of the larger context. I am a little bit more bullish emerging markets, but I'm maintaining both counts. And what I like the most about the EEM in terms of the potential for the yellow B wave of a deeper B parentheses B wave, that what I'm considering an alt count, and this green path, which is green color coded to show you that it is the more bullish potential at the moment, because it is off of a slightly less reliable, but that's the way that we're counting this as a primary low in place for the B wave. These subwave paths overlap almost perfectly for both counts. And I know that seems a little bit confusing, but this move up can be an ABC move up for the A wave or an ABC move up for the green wave 1 of a leading diagonal. This can be an ABC move up for the A wave of the green 3 in our leading diagonal, or the ABC move up for wave 1 of an ending diagonal for this yellow C of B. So both of those should try and fade back towards the 51 to 50.5 region as either the parentheses wave 2 or the parentheses B wave. And that should be an identical structure that you will not be able to tell apart. From there, they should both move up towards the 54 region. And that is either going to be an ABC move in the yellow or 5 waves up as the green parentheses C. So that's the only spot where you're going to be able to start to tell these two counts apart, but they both target the exact same region from the exact same support. So I try to limit my use of alternate counts a lot. But when I do see potential for an alternate, I really like to line it up and say, all right, here's the alternate for this yellow B wave. But how can that still play out along the way and be very similar to other structure that I'm looking for? So if we get a nice consolidation here, I see that as a high probability long attempt for a move towards 54. Then the other difference is that the green 4th wave of a leading diagonal could fade a little bit deeper than the yellow parentheses 4 of an ending diagonal for the C wave. And then this would be an ABC move up for the 5th, and this would be a slightly larger ABC move up for the green wave 5. But how they move up from here to 54 is really going to give one of these the edge to know whether we should look for the more shallow consolidation as the yellow 4 or the slightly deeper consolidation as the green 4. And then from there, if we fill out more of the wave 1 in green, we'd be looking for that to hold a corrective consolidation as a green wave 2. I have not been maintaining a count on the VIX, but I have been maintaining a count on the VXX. In short term, I'm not a fan of long-term counts on the VIX because I think it has a general long-term skew to the downside. But I think we can count a very similar A, B, C structure for an A wave, corrective bounce, and then 1, 2, 3, 4, 5 waves completing for a B wave, even though it's skewed and making a lower low here. I think that there is certainly a potential setup for an attempt at least a measured move C wave, which could be targeting the 29 region from here. So that is the immediate bearish potential that I can see. But I would not be surprised if we did not make a higher high over the 32 region that we made back here in the bottom of at the bottom in September of the market. I don't think that the volatility indexes are an exact inverse of the market and should not be tried to be seen that way either. All right, that's just about an hour, and we'll go ahead and close it up, and I'll get things converted and uploaded for you guys, and I'll see you in the next week or so. Good luck to your trading.